Good morning, everybody. Welcome, welcome. Happy Wednesday. We are doing a live trading session here with Simply Derivative. I am Jeff from Simply Derivative, and we're taking a look at the ES. We're going to be doing some day trading here today for about an hour. Wanted to give you guys a preview, really a sneak peek, if you will, of what we do on a daily basis. Already had a couple good opportunities that started this morning. Um, let's just go straight into them. You can see the markets are rallying up right now, um, and we'll go into the two setups that we were looking at this morning. Basically, everything is flat. The four major equity index markets that we look at, we have the ES, the NQ, the Russell, and the Dow or the YM, and we're basically sitting at flat, down slightly. We had been up early in the morning, right when the market opened about an hour ago, and then reversed for a nice little move to the downside, and now we're bouncing right back up there. And so you can see we're kind of caught in this range from about 27.25 up to 27.35 here in the ES. Um, let's just go right into a couple of the trade setups that we were looking at this morning that we participated in. Up here, let's start labeling some stuff. This was yesterday's high, so this is a previous day high retest entry. Right in here, you can see that yesterday, late afternoon, we had taken out the high for the day earlier that was put in and then sold off into the close. The overnight basically created this range between this high and the low from yesterday as well. And so what does that tell us? It tells us on a bigger picture we're having an inside day or possibly having an inside day. And so we were looking for a short above this purple dotted line, which was the Globex or overnight high. Globex slash overnight high right in there. And so this is one of our trade setups that we look for. It's a reliable setup. It works a high percentage of the time. And the nice thing about it is a lot of times, this setup will get triggered early on in the morning, usually within the first hour. And you can see today that we actually hit both of these setups. And I'll go to the long um, setup as well. But basically what we did, like I said up here, we were waiting for a break or a pop above the Globex and overnight high, got into the previous day high as a retest. You can see that we put in that wick, reverse hammer candle, sold off. You saw the move accelerate overnight, simply came back up, retested that early on in the morning. There's the 5-minute .D chart, which just shows regular trading hours. Right in here was that opportunity, and we sold off, and we made our way towards the overnight low. If the market can't break and hold above the overnight high and the previous day high, a lot of the times it'll retest the lows, and that's exactly what it did. And so that's one of the opportunities that we were looking at this morning. Another one that we just got out of was a long at the previous day low right in here. This would be the retest too. Again, you have this Globex slash overnight low. We wanted to see that get broken, and it did. Now we're basically trading back up at VWAP right around 29.75. So on the downside, waiting for a pullback to get below the overnight low, get into that previous day low, and then hold and rally up. And that's what it did. It literally went down to the tick on that wick, and you can see on the 60-minute that it's right in there as well. Right here is our zone. Not the greatest, cleanest of levels, but since we are in rally mode still, we were talking about this morning in the pre-market prep that buying dips is the right way to play this, and so it may not be the cleanest looking level, but the location is going to supersede all of that. along with these smaller time frame price points to pay attention to. And so you see that we have a nice rally out of this area. Um, all the other major markets are really doing the same thing. They sold off early in the morning. Nasdaq actually took out its previous day high and then reversed. The Russell's still having trouble. It hasn't been able to get above its high from yesterday either, and then that sold off. Same with the Dow. So all four markets pretty much in sync, trading in a similar fashion. You can see big old wick to the upside now. Excuse me. We're going to see how we really react off of this area. We may be looking at a short opportunity coming up here. Basically a test of VWAP and the previous day close and open right in here around 30 to 31. If we can get back up in there a little bit, up into this candle, that may be a short opportunity for us to take it back down. Basically, when the candle or a wick forms like this, a lot of the time it will retest part of that, and so that would be really the play. We are hitting as well the bottom of this first 5-minute candle. Let me make this a little different color so you guys can see this right in here. So this blue line, these blue lines from 36.50 down to 30.75, basically where we're at, was the first 5 minutes of trading on for today's session, regular trading hours. And so what price likes to do is retrace to that area, whether it's above it and then retrace lower like it did yesterday, and I'll show you an example of that, or in the case of breaking below that and then coming back up, it can use that as something to lean on to take a short. And so that's kind of what we have going on at the moment. But I wanted to go over the first two opportunities that we had seen early in the morning. Really, we were expecting the market maybe to get back down to this 27.15, 27.18 area down in here, highlighted by this orange box, which was yesterday's low on the daily candle, right at 16.25. But we are getting caught up, and that's where we took our long opportunity again, was basically the close area from a few days ago. That's where price came in yesterday and reversed out of. Price came back in today and reversed out of there. So there was a couple opportunities based on that alone. You combine that with the Globex getting taken out, hitting the previous day low. There was the opportunity to get long. And again, previous day high retest was an entry as well. Wait until price opens up, gets above the Globex or overnight high, and then take a short opportunity up there. Let's see. Where was yesterday? Yesterday. Where was the first 5 minutes from yesterday? It was up in here. Let's just go to the .D chart so I can show you guys. Here it is. So right here was yesterday's first 5 minutes. Candle right there from 30.50, 26.75. That's where the ES opened up, regular trading hours. You can see we tried to poke our head up above it a little bit. We couldn't. We retested down in there, and then it made its move up. After making its move up, it reversed. A couple nice big sell candles. Came back down in that area, and you can see it popped up once again out of that first 5-minute area, and then proceeded to fill the gap. But this first 5 minutes is pretty important. First 5, first 15 is just really a reference point that you guys can lean on either side to take some opportunities. Very simple, not very difficult to understand. It's just first 5 minutes, wrap some lines around it. Price gets back into that area. If it's within your risk parameters, then fire off the trade kind of thing. Can produce some nice moves for you guys. You can take either the whole candle itself, or you can grab the body and the wick, bottom wick. Let's say if this thing wanted to move up, if it gapped up, then you'd want to do that. Make sure you're able to take a long opportunity. If it dropped below that, you'd want to take the body and the wick to the upside and use that as something to lean on to sell against. You kind of see how that worked out right in here. Once we broke below that first 5 minutes, couldn't get back above that range, and then dropped lower into that gap fill area before rallying up and taking out the high and all that good stuff. So that was yesterday. That was an opportunity that we were looking at yesterday as well. Get rid of that. Today, again, we're going to go over this. We got some people showing up now. Two opportunities that we were looking at. First one is going to be the previous day high retest entry. That's one of our setups that we like. Again, we wait for the Globex high to get taken out. Price rallies up through that on the open, gets back up into that area. And then you initiate the short, only a couple points worth of risk. Really, from 36 up to 37.75. You have your stop really above 38. You're looking at 2 to 3 points worth of risk for a target of back down at the Globex lows. Why would we choose the Globex low or the overnight low or even the previous day low as a target? When price moves up, and this applies really to either side, when price moves up or moves down below that overnight low or overnight high area and it can't hold it, can't close above it, can't close below it, a lot of the times the market will retest the other side of that. And it's just basically, think of the markets like an ocean in a current, and it's just moving and flowing at the going with what's easy, what's the path of least resistance, if you will. And that's kind of what the market, you can think of that as what it wants to do. So if it can't get above an area and stay above an area, chances are it's going to retest lower at some point. You can have your profit targets, along the way. You want to pay yourself as the market is making money available to you, but having a target based on a static price point or an area that you can see possibly price reversing from is an ideal target location. So that's why we chose a target of the Globex overnight low or the previous day low in this case for this opportunity. Same thing for this. For the long opportunity here at the previous day low on the retest, we waited for it to break the Globex and overnight low, came back into that, touched the bottom of that wick, or basically went all the way through it. Nasdaq and the Russell, they took their lows out before reversing. Dow and the S&P did not. But again, no closes below the previous day. Didn't really close below the Globex low. You have this green candle that opened below the Globex low, but it didn't close below it. And so once that occurs and you see that forming, that's your signal for possibly hopping on board this thing to take it back up. Now, where would your target be on that? You could have your target all the way back up at the high, given that we are looking like we're having an inside day. Previous day high is up at 37.76. Previous day low was down at 27.16. Any trading between those ranges, it's considered an inside day, which means lows will hold, highs will hold, and you'll have choppy trading in between. And so you want to trade at the extremes, stay away from the middle of the zone. I know we talked about just recently, a few minutes ago, possibly taking a short up here, really at that first 5-minute area where the market opened. But these wicks to the upside is kind of negating that area. Basically what the wick is telling us is price was able to trade all the way back up here. So really there's not going to be that much selling pressure potentially coming in here. We look at the first 5-minute candle, regardless, on non-inside days, it may present some opportunities for both long and short. So today it's not really looking that way. Again, the inside day, it's going to swing from the highs to the lows until one side gets broken. And once one side gets broken, and then it may change the dynamics of any further opportunities later in the day. So let's say price rallies all the way up and takes out the high, closes above the high. There's a chance that the market will just continue to move up. we're looking at the bigger picture on the 60-minute, we're trading in this range where if we can't break out of this right now, we're basically putting in a base. Markets naturally tend to gravitate up. So once this base is in progress of formation, you're simply waiting for either an opportunity to buy the breakout, or you can wait until it does break above this area and then you get a retest back somewhere in this top end of this range. Very similar pattern back here. You can see to start the month out, end of January going into February, we had this big old range in here. Prices would get to the highs, they'd sell off, get to the lows, rally up, get to the highs, sell off, and until finally, you have a catalyst to really take the market up, and that's what happened. Broke above those highs, and then you got that retest right in here of that wick, that high wick. Dip below it a little bit, but basically this is retesting, slight pullback retesting to this area where it broke out of, and then it makes its move higher. And so if that's a similar pattern that we can rely on for a next setup, if this market wants to continue to move higher, we'd want to wait for a breakout. We don't typically trade breakouts. We like pullbacks better. But you can wait for a breakout above this 37 area, trade up, and then get a slight pullback down somewhere into this 37 to 35 area, really, depending on how this the market structure plays out and what type of formations are created within this range. But that's kind of where you would want to be once this thing broke out of this range for a long opportunity, is just waiting for a pullback. You could buy the breakout. Breakouts don't work all the time. They work a lot less than pullbacks. And so, the number one play for us and a lot of professional traders in a trending market in either direction is, buying pullbacks. If we're in a uptrending market, you're going to buy a pullback. If you're in a downtrending market, you're going to sell rallies. It's just reverse. But those are really good ways to stay in the flow of the market. And again, the market is designed to go up. If there's no real news, if there's no real catalysts, if we're oversold, a lot of the time the market's just going to drift sideways to up, and you're going to see demand continue to hold, and prices continue to move up through supply, cut through that selling. So that's kind of where we're at right now. We are stuck in this range, like I said, from about 22 up to 37 right now. Nothing at the moment for us to do. Two possible opportunities coming up here, and let's just go through that real quick. Again, if we get above the Globex high, we'd probably want to wait until this day's high that was put in today earlier in the morning to get taken out. Once that gets taken out, you can use a 5-minute chart or some variation of that, a smaller time frame, to wait for a confirmation candle for a reversal. And so again, location. It's like real estate. Location is going to supersede everything. So once the location is met, which is up here, somewhere up here, above 36, whether it's above the previous day high or not, you can use the smaller time frame to basically time your entry to get in. If you're waiting for price to get above 36, wait for it to climb above 36, use the smaller time frame as confluence. If you see the market put in a reversal candle or a bearish candle, then you can hop on board. That's one way to get in. Another way to get in is simply just set your order at your predefined level with your stop above in a less obvious place. Again, your stop, you don't want it to be, within this range. Chances are you can get stopped out. A good example of that is, let's say you wanted to get in at 24 and you were only going to take a point and a half worth of risk, which I don't recommend on the ES. You would have got stopped out and this thing went all the way down to the bottom of that wick. And so to avoid stop outs, to avoid um, missing moves, a good way to hop on board the market in either direction is just simply use a smaller time frame and wait for that confirmation candle to hop on. And then once you're able to do that, then you really just, you got to let the market work and do what it's going to do. And so those were our opportunities today. It looks like the Dow just took out its high. Russell, Nasdaq climbing back up towards the open area. S&P is back up there right now. Again, everything is still pretty flat on the day. Not much movement to the upside. Nice little pullback, and now we're kind of in wait mode. Typically, the best opportunities you're going to find in the first hour of trading from about 6:30 Pacific Standard Time. That's what we trade since we're in Los Angeles. From about 6:30 to 7:30, going on 8. It's going on 8 right now. You're going to have your better opportunities because of these levels that were created overnight. Those like to get hit typically early on in the morning, and once they do, that will present the opportunities for us. So we're basically trading back up to the highs of the day. A couple points. We just tagged the overnight high at 35, and we're going to see how this thing wants to react off of this. Two ways to enter this. Again, we wait for a smaller time frame confirmation of selling. Since we are near that area, you can just simply wait for a bearish candle to form. Once that bearish candle forms, you can go ahead and put your entry there, or you can wait for either the day high to get taken out or the previous day high to get taken out, and then hop on board. What we like about these Globex traps or Globex overnight highs and lows is the fact that, everybody's looking at the same charts, right? All traders are looking at the same charts. So what you want to do is really just put your orders above those prices, those price points, and wait for the market to come down or come up, tag those, and reverse. Taking a look at the Nasdaq. You can see the Nasdaq. So yesterday, the Nasdaq had a little low area right in here. This wasn't a low on the day, but price today shot through that, couldn't hold, and you can see that it came down and tagged this 50-day moving average at 69.74, which happened to coincide with yesterday's open area. Market rallied up from this price from basically 69.70 all the way up to 70.30. Prices cut through this area down in here. This is what held on the ES and the YM. The Russell and the Nasdaqs, their level down in here did not hold, and so it cut down lower, came back into that open, and then reversed up higher. So that was a long opportunity here, coincides with that 50-day. We're not going to just take a trade based on the 50-day and where it's at. It's got to line up with one of the parameters that we're looking for, whether that's previous day open, previous day close, or highs or lows. That's kind of what we're looking for and waiting for. And this was a nice opportunity. We didn't grab this one. We were focused on the ES this morning. We did not get in this, but that is an opportunity for us. You can't take all your opportunities all the time, and that's not a problem. What you want to do is just find as many as opportunities as possible, specifically focus on a couple markets, and then really just execute your trades and wait. But yeah, that's what happened with the Nasdaq. Here we're getting back up into that area where we retested, or where we started the day, and it's retesting that right now. Yes, still having some trouble at that Globex high. See if it wants to take it out. You got a bunch of reversals out of this area above 35, so that may be enough to hold for now to the upside, so we can get a retest lower. Back down to this 26 area. That would be a day, regular trading hour, day low retest down in here if this thing came back in here. We're basically retesting the high on the day now, and said, that it presents an opportunity for us if we can get that confirmation on the smaller candle and or we get a break above these highs in here. So trading is waiting. You just have to wait for the opportunities to form, and once they do, then you just have to execute. Three-step little process that we tell our members and our traders, regardless of what the market is doing, you got to find the opportunity, you got to measure the risk to see if it's appropriate for you, and then you got to measure the profit margin. If the profit margin is there, the risk amount is there, then you just got to simply execute the trade, right? Take a look at gold real quick for some gold traders. Early on, there was a little level. We haven't traded gold um, this month, but we have been paying attention to it because we do have some people that do trade it. Um, Gold early on, when the market sold off, came down into this 1316 area, rallied up about a point and a half. You can see that it reversed after that once the market put in its low and started to reverse. So gold and the ES and equity index markets, they're going to trade um, almost in an inverse correlation a lot of the time. Really, gold trades off of the dollar, uh, but you can see when the markets do sell off, gold tends to rally and vice versa. So there were some opportunities here in gold this morning up at the highs. That was early in the morning, and then that opportunity down here. Uh, but again, we're not trading this at the moment. We're just taking a look at the charts and kind of seeing what's going on. Yes, putting in a red candle right now. Again, we're waiting for it to take out the highs. We want to see some buyers come in, push this thing up a little bit higher, and then we can open up the profit margin and get a nice reversal out of there. On this 60-minute, basically just range bound. When you're in a range bound market, you want to trade at the extremes, either the highs or the lows, and kind of stay out of the middle. If you get caught in the middle, that's where you can get whipsawed. That's where you can, get stopped out quite frequently. And so, looking at the bigger picture is very important, even for day traders. Day traders that don't pay attention to the big picture, they're definitely missing out on some things. As you can see, I know it's a little jumbled in here. Let me get rid of these lines so we can see this. Oh, I didn't mean to do that. Let's mark that back up. Inside day, right? What is an inside day? Meaning we are within the previous day's trading range. Previous day trading range from 16 quarter up to 37.76, 75, excuse me. Both sides are holding, which produces, swings in the market, typically at the day high and the day low. Until this gets broken, you want to stay out of the middle. Like I said, you're not going to go long at 29, right? You don't want to wait until we dip down below 25, 24.50, get back into this area down here to the high side. We are closer to the high side. You are seeing the market pull back a little bit, but we wanted to see this take out these highs before we initiated a short. Shorting opportunities in an uptrend, they're going to be more limited. Profit potential is going to be more limited, and so you want to be I want to say more conservative with your shorts, but you want to wait for either levels or price points to get hit before initiating a short in a market that's continuing to climb higher. If we saw that the market was able to take that high out and then gave us a signal to reverse, that would be a better opportunity. You're basically opening up that profit margin back down to at least the open, which is at 30 right in here, if not all the way back down to the Globex low, previous day low, the day low, which is now 22 quarters. So we'd like to see this thing pop up above that price before we get in. Does have any questions, concerns? Let me know. Any markets y'all want to look at? Yeah, so we stick to 3 time frames typically. You have your bigger picture. In this case, for day trading, it's going to be either the 240 or the 60-minute. Take a look at the 240 and see what this looks like. Then we have a 15-minute where we initiate a lot of our trades off of, and then the 5-minute we're looking for confirmation and or possible signals for reversals in either direction. And so having multiple time frames is really a key for us in our process and how we evaluate market action, price action, and what the markets want to do. You can see that we don't use any indicators. There's really no need for an indicator. Most indicators, if not all indicators, are lagging. And what good is that going to do to tell you, what the market may want to do? You can use it as somewhat of a guide or something in confluence with price action, but price action is going to supersede everything. And so if you can get into the tune and into the flow of the market and where it wants to go based on price action, location of candles, and actual candlestick formation, then you're able to really just trade freely and not rely on any of these indicators that a lot of traders and people say they use that aren't really reliable. Let's be honest. If everybody's doing something and that's using these indicators, then everybody would be rich. And they're not. Everybody would be consistently profitable. And they're not. And so why do you want to do what everybody else is doing? You don't. Especially in the markets, you kind of want to take the contrarian approach. When people are buying, you want to be looking to sell. When people are selling, you want to be looking to buy. That whole Warren Buffett mantra. You want to be greedy when people are fearful, and you want to be fearful when people are greedy. We are popping back up here. Let's see if we can excuse me. Let's see if we can take this high out. If we can take this high out, then we'd look for a short opportunity. We don't trade breakouts, so we're definitely not buying up here. Why are we not buying up here? You can see that price got up in here and reversed. You don't want to be buying in an area where sellers can potentially be coming in. And you don't want to be selling after a move down when buyers are going to be coming in. Seems counterintuitive, but once you understand what the market is trying to do, understand price action, then it makes more sense. Yeah, we had our eyes on this area down in here, some wicks. Still could happen today, down in this 27.19 to 27.15.50 area. That was really the breakout and retest of this range. Now it looks like we're putting in a range above this little zone, above 27.20, with the hopes that we can possibly get back down here for a long opportunity, right? The market is not telling us or showing us that it's going to sell off, at least yet. All demand is being held, really. You can see wicks basically getting tested and holding. Supply or zones where selling pressure comes in at either highs on the same day or previous day are really getting taken out. Lows are holding, highs are getting taken out. What does that tell us? The market wants to keep going up. You may have these small pullbacks intraday, which we can profit from based on these highs and lows, but bigger picture, it looks like we're still grinding higher. Take a look at the NQ. NQ, nice big wick from 7,018 all the way down to 69.77, 69.72. Is quite the move there on this candle. Nasdaq's definitely more volatile than the S&P. I don't know what you guys are trading. We like to trade both, but if you're going to trade the Nasdaq, just be prepared that this thing likes to move. You're going to need a little bigger of a stop. But the profit potential is there as well because of these moves. I mean, you're moving from 7,025 to 69.75, 7,025 to 69. What did I say? 75. It's a 50-point move. $1,000 per contract. type of move on the Nasdaq, where the S&P has moved 24. It's about 10 points, so it's about half that. It's about $500 on the S&P's move. The Nasdaq is definitely more volatile, moves a lot more, and so it really just depends on your account size, your risk tolerance, and where you're at in your career of trading. If you're first starting out, I'd just say pick one or the other and go with it. Probably want to go with the ES just because it does move a little bit more slowly. The Nasdaq, you're going to have to make some decisions pretty quickly on this market in order to keep your risk small um, and enjoy these bigger moves. The other market's doing Russell's slightly down still flat. Dow's up slightly as well, but Dow took out its high. So when the market takes out a high, that's kind of when you would want to look for an opportunity to get short after the high was taken out, and that was the approach that we're waiting for here on the ES, is for this high, the day session high, to get taken out, stay within the range, and then reverse. It may or may not do that. It's looking a little weak right now. You got some wicks to the upside here. No closes below 33.25 in the last 15-20 minutes. No closes above 33.75 in the last 15 minutes. So not only are we stuck in a range on an intermediate time frame, which is a 15, bigger picture, 240 in the 60-minute, we're still stuck in that range. Even on a 5-minute, we're stuck in a range. The range is extremely small, but it's still, kind of indicative of what the trading is today based on the fact that we're having an inside day. So all these little things matter in the grand scheme of things on a daily basis when you're trading. They go into your decision making and the setups, and so being able to understand this and price action is really what you want to pay attention to. Hours of the trade room. Philip, the hours of the trade room, we're kind of going back and forth on this. Last year we were doing 3 days a week for a couple hours at a time. A lot of our members didn't need that much time, and so we're looking like we're probably going to stick with two days a week in the very least. Trading for from about 6:15 through about 8 o'clock for a morning session. That's just what our trading room is for right now. We do have members that will trade in the afternoon with us as well if there's opportunities. But if we hit our targets during the morning session, we're typically closing down and moving on to more educational stuff, going over entries and setups, and going over the criteria that we look for, and understanding the charts better. And so that's what happens a lot of the time. Whereas, if we get our opportunities off during the trading room session hours, we'll be done for the day, and then we go into teaching mode later in the afternoon. There are times when we're trading in the afternoon, but I think what we're going to shoot for is a couple days a week. The first 2 hours of the market open, that's typically the best time for opportunities for us, and so that's what we're going to stick with. All right, we got above the Globex again. Couldn't take out that high. Looks like it wants to reverse from here. We get a close below this candle, or get a close on this candle below 33.25. That may be the opportunity for us to get in and take this thing lower. See how this thing closes. We got about 30 seconds left on this candle. Yeah, no problem. Absolutely. We're open to different hours in the trading room. It's just really dependent on what what the members need, what you guys are trading, where you're at, where the location is. We're in Los Angeles, so we're up early. We're trading the first hour, 2 hours of the market heavily, and then as the day goes on, it gets a little slower. So typically like to have those morning sessions as the time to have our members trade with us. See if we can get a pop back up above this, up to 33.75, right in here. That's the case. It's a short opportunity. Once you put in a reversal candle, there's two ways to hop on board this guy. Is either wrap some lines around the actual candle body itself, the reversal candle body itself, and you can take an entry in there, or you can wait until it gets back up into the wicks and take your short opportunity. Again, it's going to depend on where it's at. The location is going to be more important than exactly what it looks like. And if the profit margin is there, then you can be a little flexible on your entries. Give me 1 second, guys, real quick. Hang on a second. Sorry about that, guys. Saying bye to my son. He's off to school. So perks of having a home office. All right. I'm going to come back up in here. May not want to do it. May not want to get back up here. If that's the case, another way to hop on board, you have VWAP right here at 30 quarter. That may hold this up a little bit, but ultimately we're getting this reversal signal, so it looks like we may want to test lower. You have to be conscious of this 60-minute. We closed above the open and previous close. Nice strong move up. So we're going to want to see this thing break below 31.75 for that move lower. So I was going to say another way to hop on board this, if you're not able to grab it when it pops back up into this area, is to simply put a sell stop order below that level. It moved too quickly. Put a sell stop below the price that you want by a tick or two, and then have your stop above the level, above this high, and then take it down that way. That's another option for us in markets that are moving a little quickly, is you can use stop orders to get into the market, and then at that point you may be taking a little more risk, but the whole idea being, if this thing is going to move down, it's going to do it now, and you want to be in it and not want to miss the move. Not because of FOMO or anything like that, but if you have conviction in the move, you have conviction in the level, it's hitting the level that you want and it reacts the way you want it to, and the profit margin is there, that's the most important thing, then there's no reason not to take the trade. It's just a simple, you know, um, placing it below that low and then watching it go with the flow kind of thing. We are hitting that candle body base right in here at 31, coincides with the open and VWAP. We got to see how this thing wants to react off of this. Again, we were waiting for it to pop up above 36, wasn't able to do that. It's showing some weakness right now. Not entirely convinced yet, so we're just going to wait. Other markets are looking a little weak at the moment as well. Like I said, the Dow, the YM took out its high and has reversed. The S&P got back up too close to its high and is reversing a bit. Nasdaq back up to the open area, reversed. And same with the Russell. Russell we don't trade, but we do pay attention to. It's what a lot of professional traders, money managers, hedge fund traders will look at is the Russell for direction. The small caps typically lead in either direction, and so that's something that you guys want to keep on your radar as well. So we got about 10 minutes left in today's little session that we're doing as a live stream. Again, this was just a little preview that we were doing for you guys. We're going to do this again either Thursday or Friday. So either tomorrow or Friday. Trade for about an hour, hour and a half in the live stream, just so you guys can get an idea of what we do, how we do it. We're price action traders, we're futures traders, we also trade options as well. Option strategy is really just based on our market analysis, how we interpret the market and price action. And then, we employ very simple option strategies, either buying calls or puts, selling spreads, and that's about it. We don't get into anything too fancy. We'll also do some options on the futures as well. Crude, gold, ES, Nasdaq. But really our bread and butter is price action, market timing here in the futures market. This thing is coming back up into here. You have a bunch of wicks now. Wicks are significant in the fact that price was trying to get above this level and it couldn't. Price was getting rejected. Sellers were coming in and wanting to push the market down. They were able to do that, and now you're basically getting a retest back up in here. Let's see what it wants to do. If I repeat myself a lot, I'm sorry guys. It's just the way it is when we're trying to, go through our method, go through our analysis. Most of the time when we're trading, we're waiting, and so you have to be very patient. A lot of times there's not much to say, but when we're doing live streams or we're in the group trading room, I like to make sure everybody has a clear understanding of what the heck we're talking about and why we're doing what consistently. So I will repeat myself quite a bit. I don't think it's a bad thing for anybody trying to learn either. So you can see on this 60-minute, it's holding in here in that base of that 60-minute candle, which coincides with the previous day close and the open. And so it's holding in there right now. The hourly candle will close at 9, depending on where that is. This may be setting up for a bigger short opportunity as a retest of the lows. Oh, well, there you go. As soon as we say that, I think the market hears us sometimes. Couldn't get back up into the wicks. Again, we were waiting for it. A lot of the times you're going to have an idea of where you want to get in and what you want to do, and the market just won't get there, and then it'll move. And at that point, you just have to let it go and be okay with it. You're not going to chase trades. You're not going to get short right now, right? You want low risk, high reward opportunities, probabilities, and so, we have our levels predefined of where we want to get in, and we wait for those. If it gets hit, it gets hit. If it doesn't, it doesn't. So Let's see that this thing is pulling back now. Candle body base on this particular setup was the way to go. Right in here, 3250 up to 3375. See that with the wicks. You got confluence of 2 time frames. That's really what we want to see, is confluence of 2 time frames. Once you get 2 time frames, having some confluence, that adds to the validity, or you can think of it as, like a scorecard. You can grade your trades or your trade setups. So having 2 time frames coinciding with one another will give you, let's say, an A rating on this trade setup versus a B rating where you're looking at only a 5-minute and you see a potential setup occur and it doesn't really have confluence with the bigger picture or your intermediate time frame, and you're really just taking it off of one time frame. Those are going to be your lower trade grade opportunities, kind of. And so that's another way to really make sure you're being patient and following your rules, is identify your setups and then kind of go through them in terms of, what does it look like, risk reward, what is the profit margin, do we have multiple time frame confluence, are we at an extreme? All of these little factors go into each of these opportunities, and then you can basically, have a weighting scale, a grading scale of those particular setups, and then at that point choose the higher ones. If you have 3 setups that you like, that look like they can potentially get fired off on the day, 2 of them are C's, 1 of them is an A, wait for the A. You know what I mean? Until you get to the point where you're comfortable taking a little money out of the markets consistently at each of those opportunities. A lot of the time you're going to have an opportunity or opportunities where you can take 50 to 100 bucks in the case of the ES out consistently. 1 to 2 points is not that big of a move or all that improbable to do in the ES. Most professional traders are looking for 3 to 5 points on a day. So if you're able to do that in each of your little setups, then you're going to be in a good place. Coming back down, looks like we want to retest the lows. It's getting into this wick and this big candle move up. 2 things here that we're going to look for. If this starts to reverse and show some signs of strength on the 5-minute, then that would be the opportunity to hop on board and get on that for a long, back up to that 32 area. Otherwise, we want to wait for this thing to come down and get below the either Globex low or the previous day or today's low, really. This is what was set today. And so we want to wait until we get a little bit lower before looking for that long opportunity, unless this small time frame gives us something else. Take a look at the Nasdaq real quick. Nasdaq, same thing, holding in here. So a smaller time frame, 10-minute. You can see we basically got into this big red candle up in here, showed some weakness, and then finally pulled back. Retest to 7,000. What it's doing right now. Yeah, so the Nasdaq, it put in those wicks. I'll go back to the ES before we get off here. Nasdaq came back up on this candle after putting in a couple red candles, back up to that area of 2150. Coincides with the ES area in here. ES wasn't able to get back up into the wicks. It basically hit the bottom of that candle body and then reversed, and that reversal candle, that reverse hammer right there. Nasdaq was able to get up there and then reverse. And so, right idea, just didn't get to our level. Not a problem. If you guys have trade setups and you either miss them or a price doesn't get to your level, then just brush it off and wait for the next one. There's at least a handful of opportunities every day, intraday, in these markets, and so there's no need to push, press, feel left out kind of thing, beat yourself up because you missed a move. Not a problem. There's tons of opportunities each and every day. Got about 15 seconds left on this. on this 5-minute candle. Showing some strength. Back up at VWAP, 2730. There it is. Probably going to get back up in here. Possibly retest lower. All right, guys, it's 8:30. We're going to call it for today. Just wanted to give you guys about an hour's worth of a preview of what we do in our trading room each week with our members. Again, we're going to be trading in our trading room at least 2 days a week, possibly 3 days a week for the first couple hours in the morning. We're here in Los Angeles, so we trade from about 6 to about 8:30 with our members. And if you guys want to know more information, you want to sign up, visit us at simplyderivative.com. We should have some links in the description to join the trade room. If not, visit us at simplyderivative.com. Send us an email if you want some help, if you have some questions. Feel free at any time. Like I said, we're going to be doing this again either tomorrow or Friday. We'll blast something out on social media and let you know, and then we'll go from there. Thanks for stopping by, guys. Really appreciate it. If you have any other questions or concerns, like I said, just shoot us an email, get in contact with us, and be happy to answer any and all questions. And we will see you either tomorrow or Friday. Definitely look out for our videos for the pre-market prep and the daily recap coming out at the end and beginning of each day. And be sure to give us a thumbs up and like on the video. And subscribe to our YouTube channel. Follow us on Twitch. We have our Twitch channel going, and it's live. We're actually streaming to it right now as well. Twitch.tv/simplyderivative. And the YouTube channel is in the link below. It's on our site. We post all our videos to that, so be sure to follow us there as well. All right, guys, have a great rest of the day. We will see you next time. Take care.